Okay, my name is Jamie. I am the market analyst who produces financial market commentary, podcasts, webinars, and lots of other financial market analysis for Vantage Markets. And I'm very excited to be hosting today's session about trading psychology. And with me, and I'm thrilled to introduce my guest, Dr. Brett Steenbarger, who works as a performance coach for hedge fund portfolio managers and traders, and has written numerous articles and books on trading psychology. Welcome, Brett.
Thank you so much, Jamie. I really appreciate it. Just a little quick background. I work as a professor of psychiatry and behavioral sciences at a medical school in Syracuse, New York. But I've been involved in financial markets myself, trading, since the late 1970s. And I've worked as a performance coach since early 2000 period. And during that time, I've learned to apply the academic research in psychology to the actual practice of trading. And I found that that is quite helpful for traders who want to improve their performance.
Fantastic, Brett, and a fascinating background that you have, and to relate that to trading then is crucial for all our audience and for myself as well. Absolutely. So today we'll discuss kind of two specific topics related to trading psychology. So the first is the importance of reviewing our trades. And then the second idea is about diversification versus a more focused approach. But before we kind of dive right into those two topics, we just need a bit of context on how psychology plays a major role in trading. So Brett, as someone that is so well versed in trading psychology, could you just share with us what trading psychology is, and then run us through the importance of trading psychology in successful trading?
Absolutely, Jamie. So let me back up and just talk about trading itself for a moment. Trading is a performance activity, just like athletics are performance activities or performing arts. That means that success is built on three factors. The first are talents. Those are abilities that we're born with. Skills, those are abilities that we develop primarily through teaching and mentorship. And the third is mindset or psychology. If we have a good psychology, if we have a positive mindset, that cannot substitute for talent and skill. But if we have talent and skill and have the wrong mindset, then it can very much interfere with our performance. The real challenge for developing traders is to figure out, what are your talents? What are you really good at? What skills do you need to develop, and how are you going to develop them? Who is going to mentor and teach you? And then how are you going to make sure that you stay in the right mindset to best apply the talents and the skills?
That's fantastic. And I guess would you say one is more important than the other, or out of those three key skills, or sorry, three factors, or are you saying they're kind of dependent on each other, I guess?
I think all of them are necessary. Each of them is necessary, but not sufficient. We really need all three. In other words, we can have talents, but if we don't build the skills, think of all the skills that go into successful trading, from knowing how to enter positions, knowing how to manage positions, knowing how to risk manage. If we don't have the skills, we're not going to really profit from our talents. And if we have a good mindset, but we don't have talent or skill, then we'll just feel better when we lose money. So we really need all three.
Right. It's a great picture and a great metaphor, really, isn't it? That's really good. I just want to jump in then to the first part of this discussion, really, and we touched on it at the top of the session, and it might sound like a sort of really basic thing to do, right? But why is having regular reviews of our trades for you crucial for improving trading performance?
Yeah, I'm going to push back a little bit, Jamie, because I don't think reviewing our trades is enough. I think we have to review markets. And in that context, yes, we will review our trades, but we want to review markets and how markets are behaving, how our markets are behaving, because markets change. They change in their trends, they change in their volatility, and the things, the patterns that we observe today in markets may be very different from what sets up a week from now, a month from now. So we want to first review markets, where there's opportunity, how the market's behaved, where are their patterns, and then we review our trades to see if we properly took advantage of what our market was doing. So the review of the trade, review means review. We're revisiting the trade to see how we did. Did we enter at a good point? Did we exit at a good point? What happened to the market after we exited? Could we have managed the position differently? How about the sizing of the trade? Were we sized properly? Et cetera, et cetera, et cetera. The key is that each review needs to result in some kind of learning. What did I do well that I want to continue doing? That's learning. What did I do not so well that I want to improve? And then those become goals for our next trading session. So reviewing is not enough. Reviewing has to be followed by learning and goal setting.
Absolutely. It's a fascinating point. And in some ways, I kind of say to myself, well, how can we practice without then doing live trading, for example, I guess? And what would be sort of some of the routines that you might suggest and traders can establish to sort of have that effective mindset, if you like?
Well, good question, Jamie. There are a couple of ways of practicing and trading. One is simply to trade in simulation mode. In other words, you follow the market and you figure out what trades you want to put on, but you're not risking. This is very good for real beginning traders. So you're getting the reps, you're getting the repetitions without any risk and learning the patterns in real time. Many trading platforms, I know the one that I use called Sierra Chart, has a market replay function. So at the end of the day, I can replay the trading session and see bar by bar by bar how my market moved and re-experience that. That's a great approach to practice.
Yeah, I totally agree. And sort of the specific tools and techniques that can help, do you think, with trade analysis? Have you sort of three sort of favorite techniques that you might use or that you think are good for beginners as well as sort of more experienced traders?
Yeah, so some basic statistics that you want to keep on your trading. There are software programs that'll do this for you, but I don't think it has to be extremely detailed. So first, how many winning trades did you have and how many losing trades did you have? And you can break that down by trades where you were long and trades where you're short. What was the average size of the winning trades of what's your average size of profit per trade? What's the average size of the loss per trade? What was your average holding periods of trades? Minutes, hours, and so forth. So you're breaking down your trades in certain categories. What you want to see is, do you have more winning trades than losing trades, but also is the average size of the winning trades greater than the average size of the losing trades? Because that will tell you a lot about your risk management. And for developing traders, risk management is one of the first things you want to work on intensively.
Absolutely. I think the phrase paralysis by analysis kind of comes to mind as well there, where you said just to keep things quite simple. Because especially I know, people just beginning in markets think they have to cover all sorts of areas with these techniques. And yet, as you've said, you just mentioned just a handful which, are useful in the first instance for trade analysis, I think. And what do you think some of the sort of common mental obstacles traders face when reviewing their trades? One, for example, I guess being that paralysis by analysis potential because you're reviewing too many things. What do you think are some of the common obstacles, the mental obstacles, I guess?
Yes, I think that trading is a separate process from the analysis of trading results. Trading is separate from your research about markets. I think if you keep those separate, you won't experience that paralysis. What happens is, while we're trading, we start to get into all this analytic stuff, and that makes it difficult to act. So, for instance, in my own trading, I keep track of quite a few statistics, but I don't do that during the market hours, during my trading hours. I have a separate period of time to review and develop my ideas. And that helps prevent that kind of paralysis. It's important, this is back to the idea of talents and skills. It's important that the kind of trading you do really plays to your strengths. Because if it does, then doing the research, doing the analysis, reviewing the trades is going to be something intrinsically interesting and rewarding for you. It won't be a burden.
Yeah, I think that's great. I think it's good now to move on to probably the next part of our discussion. And it's this dilemma around sort of diversifying versus focusing on one industry, one asset class, one market, I guess. And from my point of view, as I sort of touched upon again, I initially started out with a friend who taught me his way of trading. And it was interesting. And I always thought then I had to be sort of the expert in that market. And similarly do and copy that sort of way of trading, if you like. And I guess, as you've mentioned, markets are always changing in many ways, and probably the key for me then realizing really is that we should match our trading strategy with our personality, really. So I just wondered what. Or can you help us understand the psychological factors that influence the decision to diversify or focus on one market? And then how do psychological factors influence the decision to diversify or focus on one market, I guess?
Yes, it's a great question. And people will differ based on their cognitive mindset. I teach in a medical school, and some medical students go into fields where they are generalists, like in family medicine, internal medicine. There are others who specialize and even subspecialize. They become a surgeon, but then they subspecialize and become a back surgeon. So it's very specific. Depending on our cognitive interests. We can really choose to focus. We can really choose to broaden out. In general, my experience is that we're first best off mastering one area and then gradually expand to other related areas so that we have some benefits of diversification over time, but we're not trying to totally remake ourselves. I'll give an example from my trading. Okay, so I trade the stock index futures in the US, and I generate ideas by tracking the behavior of every sector of the market. So I look at what the technology sector is doing, consumer discretionary, consumer staples, utilities, and so forth, so on. And so I'm tracking the different sectors and their behavior. I'm also tracking high frequency information about the market. So how many stocks in the NYSE universe, which is over 3,000 stocks, how many are trading on upticks and how many are trading on downticks at every moment during the day? I have all that information in front of me, and I can see how it's shifting. And because I'm good at quick pattern recognition, that tells me when there's a shift from buyers to sellers or from sellers to buyers. What has happened recently in the US stock market is that institutions are very invested in stocks. So they have a high gross investment in stocks, but they are changing what they are buying and selling within the stock market universe. So for a long time, they were buying large cap stocks, selling small cap stocks. They were buying technology shares, and they were selling value stocks. And so that recently started to make a shift. And I started trading, I diversified, not just by trading the stock index, but by trading the different sector ETFs. So if I see money flowing into technology, I might trade the technology stocks, or I'll trade the technology ETF, XLK, and might at the same time sell what's relatively weak. So I've diversified from trading the index directionally to trading long and short the different sectors, because that's how the market's been moving lately. But I still used the same skills, the same talents. I just broadened out their expression.
Right, right. Fascinating how you do it on a day-to-day basis as well. I guess simple question really, how then do you keep a sort of calm mind, if you like, trying to synthesize and trying to take in lots of that information, intraday, intra-minute, I guess sometimes. So is that any tips on keeping that calm mind, Brett?
I actually keep a calm mind because I track those statistics. And again, that's a function of how I'm wired. Other people might find that frantic. As a psychologist, I'm listening to people, everything they say. I'm listening to not only their words, but how they say the words. I'm listening to their tone of voice, their emotion. I listen for when they change topics. All of that is significant. That's the high frequency data, so to speak, that a psychologist have. I'm really just applying that same process to markets. And because I've done it for so long and because that's natural to me, I stay calm, I stay focused by doing what I'm good at. Now, someone else may have a totally different skill set and may need to focus on other things. But we keep a positive mindset by doing what we do best in the ways we do them best.
Yeah, I know I've read various things that you've written about that simple factor, right? Is concentrating on your strengths, and it takes me back to a very famous rugby player, actually, rugby union player in Ireland, who wanted to give one line, and he said everybody concentrates. A lot of people concentrate on their deficiencies, but focus on your strengths and make those world class, right? And that's
Yes,
kind of what you're saying.
absolutely. What are you really good at? And usually you can kind of figure that out by looking at your life before trading and what you were good at, in your previous experience, and
Yeah,
then leveraging that in terms of how you approach markets.
yeah. And do you think, on a wider sort of perspective, what's the impact of sort of general cognitive biases on investment choices, I guess?
Yes, and
A
those,
much wider question.
yes, there are many different cognitive biases that can enter into our trading. One of the most common is overconfidence bias. In other words, we make money, we make money, we make money, and suddenly we think we've got this figured out. And we start taking trades that we shouldn't be taking. We size them too large, and that leads to real problems. And so, one simple exercise I do with traders who have made money is imagine that you're down money. Imagine that you've lost money. Would I take this trade right here, right now, if I was down money? If I would, okay, that's a pretty good idea. But if not, then maybe it's overconfidence.
It's a great. I still do it now, and I remember doing it lots and lots, which is exactly that question, Brett. It's a brilliant question to ask, isn't it? Before you put on a trade, because that sort of sets you up, doesn't it, for whether you take that trade or not. Do you think, with this, just on this idea of diversification, though, sort of what are the psychological advantages then? Is it about risk management in a way, I guess, and helping us understand risk more because we're looking at other markets? Or is there sort of an emotional sort of balance to it as well, do you think?
Yes, well, certainly diversification helps our returns. In other words, if I have some skills to trade longer term, and if I have some skills in short term trading, I can do both, and each will contribute separately and differently to my total profitability. Diversification also helps in that it gives us more ways to win, particularly when markets change. So that becomes really useful. Many people I work with eventually diversify by working with other people. They form teams either where they work, or they form teams virtually where they share ideas, and that helps them see more opportunities, participate in more opportunities, which improves their overall returns. If we're just doing one thing and one thing only, it's great when it works out, and we're vulnerable when it doesn't.
Sure, sure. And sort of on that sort of concentrating on one market, are there psychological sort of benefits, do you think, as well?
Well, we can focus on one market. I focus in my trading on one asset class, but trade it in multiple ways. So I can trade not only long and short, I can trade things in relative space. I can trade short term versus long term. And so all of that, even though I'm trading one thing, provides that diversification.
Well, it's been so useful and so super informative for me and hopefully our listeners as well. There were so many takeaways, and we could talk for a long time, I'm sure. And I'd love to talk to you again at some point. I guess the takeaways really go back to the start and just your thought that trading is a performance activity. I think those two words are key, and then we can think all around that. We mentioned the gym as a sort of great picture, and then those three factors, right, which were sort of talent, skills, and then mindset. Um, And then going into the mindset question, I guess for me is deliberate practice, and it relates to reviewing our trades, and not just reviewing our trades, but then making something of that review. So reacting, rethinking, and then essentially kind of changing our ways and improving our trading psychology and hopefully our trading success. It's been really great talking to you, Brett. I really appreciate it. And yes, thank you so much for your time.
Thank you very much, Jamie. I'll just quickly mention my blog is called Trader Feed, TraderFeed. And there are a number of free articles on all these topics. And I've been writing that since 2006, and there are thousands of posts, and that might be a resource for some of your traders.
Yeah, absolutely. I can't recommend it enough, actually. And I've been following it for a number of years, and I go back to it, and the lessons stand the test of time, as we know. And they are lessons in trading and in life as well. Let's not forget. So, yeah, thank you for that, Brett. And thank you so much again for your time.
Thank you. Appreciate it, Jamie.